Ladies and gentlemen, welcome back to the number one podcast for your investing needs here at Stock 32 Me. We go live every Wednesday at 7:30 p.m. Eastern Standard Time, generally, to break down stocks each week. We have interesting titles and all that fun stuff. Of course, we are the admins and moderators of the group. You guys are the awesome members who get to hear this before everybody else. We got Tony up here.
What's
Tony up here and Dalt over here. How you guys doing today?
All right. Do you think we could start dubbing ourselves the number one podcast in the world and just go with it until we become the number one podcast in the world?
Hey, you dream it. Hey, I thought I said I was an award-winning podcaster 6 years ago. I won my first award. This year. So if I say it has to happen. So, but in 4 years, not even. We got 50,000 members in this group. We're just growing as growing. So we'll be number one in no time. Just like we're going straight to the moon, like some of the stocks apparently are going. But anyways, enough moon talk. Dalt, how are you doing? The licensed advisor here from Court Capital, lending your expertise. What are we doing?
Good. Just same as always, released a new article, as I always do before our Wednesday live videos. I just talked about we're in the longest bull market in history, and I just talked about the gains of some of the indexes like the NASDAQ 100 and the S&P 500. They've just been amazing. So it really speaks to the power of index in investing. I really wanted to stress that.
Yeah, no, that's
Shout
something
out to Arthur and Steve.
Yes, thank you very much. We love when you interact. If you're watching live, make sure you use hashtag live to let us know you're there. We'll shout you out live on it. And if you're watching on the replay, hashtag replay, and we'll call you out in the next video. But guys, we have
giveaways.
Yeah, we have big giveaways. Dalt, being the amazing investor that he is going to be giving away some crypto and stocks, and maybe some later on. You notice I have some new wall art here. There could be a contest about winning something similar. It's a very nice rugby jersey from my good friend Dom Einhorn, an amazing investor, an angel investor, and super startup investor as well. But enough about that. Let's talk some stocks. Which stocks do you guys want to start with today? Because we're covering leave the ETF YOLO.
I'll kick off if you want.
Yeah, go ahead.
How do you feel about me leading off with Boeing, Tony, and then you leading with Lucid, and then all right.
I hate it.
All right,
so much, but I'll get.
All right, yeah. Let's bring up the screen so that you guys can see what we're talking about. Here's Boeing's year to date. So far, they closed at $231.57 American, up 14.23%. Tony, Dalton, let's go.
Yeah, so it's been a great year for Boeing. Their most recent quarterly earnings report for Q2 looks like they swung to their first profit since 2019. The particular article where I read that cited COVID woes, but I really think it had nothing to do with COVID woes. It was the fact that the 737 MAX 8 couldn't stay in the sky. So those planes were extremely deadly, and Boeing had a lot of negligence in the way that they handled that sort of situation. They didn't seem to want to admit that it was a fault on their end. They were blaming operator faults at the beginning. And whenever you have more than one plane go down, that begins to cause a problem. I think 2 crashed, and I think they had 2 other instances where engines had failed, and pilots were able to put the plane back down on a tarmac. So they had a bunch of issues rolling out that plane, and the merger between Airbus and Bombardier here in Canada for their mid-sized jets. That merger helped Airbus steal a lot of market share away from the 737. So it seems like they're bouncing back here slightly. They've had a good year, and like I said, their first quarterly profit. I think there's still woes with Boeing. I wouldn't ever jump into investing in them, and I'll tell you why. They've had, even before they had all of their 737 MAX 8 issues and COVID issues, they still have less than a 10% profit margin. So they're running a really, really thin operation there, and revenue has done nothing but fall since 2017. So even if things were to get back to best case scenario for Boeing, they're still running it kind of close as far as their main source of revenue goes, which mainly comes from selling mid and large size planes. Of course, what they do in the space market is open for interpretation, how much revenue they could squeeze out of that. They do have some of the other NASA contracts that SpaceX doesn't have for the ISS and things like that. So quite interesting to see what they can pull out of there. But for me, I wouldn't invest in the company. Profit margins are too thin, and the way they handled that 737 MAX 8, I just hate to see that from management.
All right,
Yeah.
Tony, do you want to add anything to what Galt said?
Yeah, I think, like you said, Boeing did have some problems. I do think COVID hurt aerospace big time, because I'm in aerospace and I do a lot of repair on damaged aircraft engines, and we do a lot of recycle work for engines, and we were hit tremendously. And I do think that did impact them, but Boeing was in that rare situation where they had a lot of controversy before COVID hit with their engine failures on the MAX. But I will say, as someone that's in aerospace, it is coming back. It is getting stronger. We're seeing big increase in profits in my company. We're seeing Pratt & Whitney giving us more work, GE getting more work. We're seeing a lot more work coming in. We're actually starting to get really busy and hiring again. They've been on a crazy hiring spree as of late. Boeing, like you said, it's not a company I would invest in personally, but Boeing is just another one of those great American companies. It's been around for a long time, great innovation, long history of success. I mean, I don't know what their stock price is at all time. Can we pull that up on the screen?
So this is the last 5 years. Give me a second. I'll remove this.
Boeing's, yeah.
Give me a second. So we want Boeing's all time?
Yeah, let me see. I got it. So that's what I thought. They're up almost over 11,000% all time, which is just absolutely crazy, right? 11,000%. So they started out at like $1. So they've been on the market since 1981. So they've been a publicly traded company for a really long time. I don't expect them to go bankrupt anytime soon or just vanish from the market, because if anything crazy really happens, I assume this will be one of those companies that the government gets involved with and bails them out.
Yeah.
Because they're such an integral part of our economy, and their planes are such a big part of travel. So personally, I'm not going to invest in them. If there was an opportunity where you were going to invest in them, it was probably back in 2020 during the market crash. But they have had a pretty decent year. I'm not sure what their profits are going to be going forward, as far as like what you can expect for the next 5 years trajectory. I don't think they're going to be beating like the S&P 500 or anything like that. So there's way better places to allocate your money, and there's probably way better airlines as well. So
excellent. Just to let everybody know that what we're talking about right now, we're talking about Boeing airline. Yes, and welcome to the live stream, Sabrina. It's always a pleasure to see you. Again, I'm about to be corporate Phil right now. Show Phil.
Yeah, Boeing is a part of the Dow too.
There's just a lot of airline stocks out there. You know, there's so many of them that you can go to look at. You have American Airlines, Delta, Southwest, Raytheon. There's so many out there. Even GE is kind of an aerospace stock at this point, because they're focusing really heavy on aerospace. Maybe like an aerospace ETF, if you wanted to if you're really convinced that air travel is going to go back and it's going to bounce back in a big way, maybe you grab an ETF for it. I don't know. I don't feel great about any of these. I don't feel great about any of these aerospace companies, to be honest. Like, I don't think they're going out of business. I think they're an integral part of the economy. But as far as investing in them, I just wouldn't feel good about any of them, to be honest. I don't know how you guys feel about that. But
hey, I always follow your guys' advice when I'm investing.
Are you investing in any aerospace stocks, though? Is there any one that you like in particular?
Myself?
Yeah.
I would go for, if I was going to, I have never invested in one, and I'm not now, but if I if I was, it would be Airbus, because I really like that partnership
Airbus.
when they bought out Bombardier's mid-sized jets. Those C series jets from Bombardier were already eating into market share from Boeing 737 before they ran into trouble with funding the creation of those jets. And so when Airbus took those jets over, and I think they've named it's the A2 something. A something is what Airbus has named those planes, but they're essentially the same plane, and Airbus has been using them to steal market share away from the 737 series. So I really like planes. But they were more fuel efficient. They were quieter. It was all around better plane. And the 737 MAX 8 came out, I think, afterwards in competition to say, okay, well, we can still carry more, and we know how that went. So.
We saw that nice dip.
There's a lot of aerospace and defense ETFs out there. If you guys really wanted to get into this field, that's the route I would probably go rather than picking one of these, because I don't really feel good about any of them. But
so I have a question for both of you, Tony. You bringing up the aerospace ETF is something I'm just piqued this question, and since I have you guys here, we might as well ask in case someone's here. For a beginner investor, let's say someone who doesn't know what they want to go in, doesn't know anything about stocks, but they have an interest in a certain industry, let's say like tech or aerospace or AI or something. Would you suggest doing research in the ETFs that are performing well there, investing in there, and then learning about what companies are they invested in?
Well, I think if you're new in general, you should probably just grab an S&P 500 or a total stock market ETF and then learn how to evaluate individual stocks and then pick which stocks you want. Or if you are set on grabbing aerospace and defense companies, maybe just grab an ETF for now and learn about the companies, read through their balance sheets, look at their earnings reports, read some news on them and see what's going on, and then pick out, single out which one you want in particular and maybe buy a bunch of shares of that, So it's tough because picking individual stocks, like for instance, the S&P 500 20 years ago, none of the top 20 companies that were in there 20 years ago are in there today. So it's really hard to try to beat the market.
Yep. Correct.
Excellent. All right. Which stock do you want to go next to? We have Lucid, we have Walmart, and apparently something about cocaine. I want to know what that is.
This is the one that a lot of people want to know about.
Here we go. All right, Tony, you can go ahead and break down these financials for us.
So Dahl can jump in on this one too. So the story behind Lucid and what Lucid is you have to start with CCIV, which is Churchill Capital, which is a SPAC. So a lot of people get confused and they think that Churchill Capital is Lucid. So in a way, yes, but no as well. So it started out as a SPAC, and a SPAC is just a special purpose acquisition company. And what they are is they're like a blank check company that has no underlying assets. Their sole purpose is they're on the stock market, traded on the stock market as a stock of a company, but they are no real company. They're just money, basically. They're investors trying to bring a private company and make them public and get them on the stock market and bypass the IPO process. So,
Phil, you have the Mexican one, I think, up for Lucid.
This is the one.
My bad. I think I might have sent you the wrong one.
Yeah. Give me a second here.
I think it's LCID, right? Is the ticker?
Yeah, they look like the same. Here, Phil, I'm gonna put the link in the chat for you.
Thank you.
So Churchill Capital is a SPAC. They're traded on the stock exchange like a company, but they don't have any underlying assets. It's just a bunch of investors that pooled their money together, and their sole purpose of this SPAC is to take a private company public. So the speculation for a year now is that they were going to take this EV company called Lucid and take them public, and they're going to bypass the IPO process. And the problem with SPACs is these investors have a very short time frame to bring a private company public. I think it's 18 months, right? 18 months, something around there, 2 years. And if they don't find a company and take them public within that time frame, then the initial investors get their money back. So they're not always looking for the best company. They're just trying to take anything private that sounds decent or has some buzz behind it and make them public and make money on it on the stock exchange. And then these initial investors cash out quick, unless it's something that they really believe in and they want to hold for a while. But in like 99% of the times, they're just trying to make a quick profit and flip this and get out. So it remains to be seen what's going to happen with Lucid. And there's a lot that we can get into in a little bit about what their cars actually are as far as capacity and specs and sales. But is there anything you want to add to what I said about specs first before I get into that?
No, I think you really summed it up perfectly, and I like that you told them about the stipulation that specs had 18 to 24 months to actually buy something, or else the investors get their money back. So it comes to a certain point where the longer it takes for them to find a company, they're willing to settle for a lesser quality company before that time runs out.
Right.
So that was a very good point.
Yeah, so CCIV is basically dissolved, and now it's Lucid. So that's the backstory of what CCIV was. And now you have Lucid, and during the merger, CCIV supplied Lucid with $4.5 billion of capital. And that capital is going to be used to manufacture these cars and make more plants to meet the demands of the sales. But here's the thing with the sales of Lucid. So I went on their website, I went on YouTube, I watched some videos of these cars. They're nice cars. They are impressive looking cars. They only have one model. It's called the Lucid Air, and they have several different editions of the Air. And the cheapest model is $70,000. The most expensive model is about $130,000. And
it is a pretty looking car, I must say.
It's a nice car. Yeah, it's a nice car. The interior is really nice. But here's the thing. So they do have pre-orders for this vehicle, and they have around 10,000 pre-orders, which they're estimating is about $900 million in sales. So if you average that out, it's about $90,000 per vehicle. But the thing is, I went on their website. You can pre-order this vehicle for only $300 down, and the pre-order price is 100% refundable. So they don't really have any sales yet. People could get pissed off and be like, "This is taking years. I'm out."
So let me just understand something. I go to their website for $300 down. I could theoretically pre-order.
You can reserve a car. Yeah. Yeah, if you pull up their website, you're on their website right now. Their main page, you could reserve the car for $300 down. Now, it also says it's fully refundable too. So they don't have, even though it says their company came out and put out a press release saying that they have around $900 million in sales. Well, not really. They're just going off of based on what people are reserving. Because I did a build a car myself to see how that works. You can build a car to any specs you want, like interior colors and rims and color of the car and all this stuff. And I'm guessing people were building.
This is like
the average car price built was $90,000, but that doesn't mean they're taking in that sales. They're only taking in $300 per car for pre-order. So
I have to say, this is like a futuristic car. Like this, I don't think we're ready for this nice of a car.
No.
I don't think society is ready for this nice of a car.
Do me a favor. So I'm getting to a point though. So this car is really nice. It does look and feel luxurious. But the thing is, if you're going to spend $70,000, say you're somebody that has $70,000 to spend for an EV vehicle, aren't you going to buy something with some prestige, like a Porsche or a Mercedes? You know, go pull up a picture of a Mercedes EV and put it side by side next to this. The Mercedes looks even more badass. It looks even more futuristic. They have one of the Mercedes has like the entire dash is an LCD screen. It looks ridiculous.
This one, Jesus.
Yeah.
I'm in Star Trek. I'm sorry that this is Star Trek. This is Star Trek for me, ladies and gentlemen. Welcome to Star Trek. I'm Captain Kirk. This is my spaceship that I've always wanted to drive. This is my goal. Thank you.
So, like you said, we're not ready for this yet, but now look at that. Doesn't that look even more insane? Like,
see this,
even
this,
the
like this seems like it's going to be bad, but this seems like it's going to be the retail version. That this is the common. This is going to be the middle class version, and this is the rich class.
yeah.
This does not like this looks like a spaceship. Like this, honestly, with the LCD screens and all that, it looks like a full-on spaceship.
So I'm assuming that Mercedes is probably more than 70,000, even if
this
it's
is
100.
70. This is like 80,000 to 150. They're just knocking off $10 to make it look interesting.
You see, this is not good. Yeah, this is not good for companies like this.
No, it's the same exact price as a Lucid. So if I have $150,000 to spend on an EV, I'm not buying a Lucid, a car that's not even in production yet. I'm going to buy a Mercedes, or I'm buying a Model S Tesla, or I'm going to buy a Volkswagen. I'm going to go buy a G. I'm going to go buy a Cadillac.
Porsche Taycan.
Yeah.
Look at this. This is gorgeous right here. This picture.
Bill Gates bought the Porsche Taycan instead of getting the Tesla Model S.
Look at it. You have
volumes
look
that he
at
would spend
this.
his money
so
overseas at Volkswagen.
What was that, Phil?
I'm sorry. Will you get away from here? I'm just looking at this, like how comfortable this looks though. Like everybody has their it's two people. You're not crowded with a third person in the middle like you can, but it's like everybody has their space and mom and dad are comfy. Like this, if I was a kid or if I had kids, like if I had the same amount of kids, my parents had 3 kids, like the nuclear family, I would love it. This would be the perfect car.
And you know what else is crazy is I did some more digging on some of the Lucid press conferences and some of the stuff they released, and they're not even expecting to make a positive net income until 2025. So it's 4 years out, and they do have $4.5 billion injected in income from this merger, or from this SPAC deal, I should say. Yeah. But the thing is, are they going to be able to stretch $4.5 billion out over the next 4 years? It just seems like people are investing in this to hopefully get the next Tesla, where the stock explodes thousands of %. And I just don't see that happening. And my last point is Tesla has done a good job of bringing down the production costs and the overall sale of their vehicles. And I think their Model S right now is under $40,000, I believe.
Yeah.
So why would you? I mean, you could buy Model 3. Sorry.
Yeah, Model 3. The Model 3 is the car of the people.
Model 3s for the price of one Lucid.
Yeah. And I get to say I have a Tesla that has autopilot and has all these amazing features.
They do have a longer battery life, or you get more mileage out of the battery, supposedly 500 miles on these Lucid. But I mean, I assume 4 years from now, when they're actually mass producing these things,
Tesla's going to be
everyone's going to have that.
Yeah, everybody's going to be probably using Tesla. That. Are we ready to go into Walmart, or do we want to YOLO the rest?
Well, I don't know. I kind of talked the entire time about that, so my bad. I don't know. Do you have anything to add?
I agree with you 100%. I have nothing to add. Yeah.
Ooh, something here in Arizona, they have recently built a huge Lucid facility.
Yeah, I looked in Arizona is their headquarters, actually. I think that's their only Lucid factory right now, and they're working on building more in California and Florida. So
interesting. Do you want to add anything else to the Lucid discussion, Adult, or do you want to move on to Walmart?
Well,
nope.
I would say people probably want to know, should they be investing in Lucid? Yeah.
Are we investing?
I honestly, I don't even know, because the problem is the stock price probably isn't going to match the reality of the sales, and people are going to buy this anyways and drive up their stock price. Me personally, I'm not going to buy it because I realize that this is so far away from being profitable. But I don't know. What do you think?
Again, Marcy asking, should we buy? Should we not?
I think it's a waste of time. I think there's better companies that are getting more sales now. It's a two-horse race, really. Tesla has a thin lead over Volkswagen. End of 2022, that'll change. Volkswagen will be the leader. I don't know why people think that Volkswagen, Honda, and Toyota are just going to disappear, and Lucid, NIO, and Tesla are going to be the only car companies. Bloody ridiculous.
Why do you think Lucid has so much?
Volkswagen could buy all these companies out overnight. It's a joke. It's just.
Why do you think Lucid is so popular? Like, was it one of those meme stocks that was circulating the internet, or like, what was the deal with that? Why did that become such a big deal?
It was just the SPAC boom. I guess when capital became super cheap to borrow and to generate, people just took the opportunity to create a million SPACs, and it became a head hunting game for taking everything public. There's a bunch of them, electric air taxis. There's so many foolish things out there right now. There's a million electric vehicle companies. Like, it's just.
Anybody with an idea, pretty much.
Yeah. Cars suffer. Like when we had the gas vehicles, there's certain gas vehicles that are not around. You know, Saturn, GM is getting hit hard. Like there's certain companies that are going to rise to the top, and the EV space is going to be the same thing. All these companies, Lucid, NIO, they're all going to fall to the back. NIO will sell cars in China. That's about it.
Like our buddy Lloyd Ross says that. 100 years ago, there was all these car companies, and today only 2 of them are still around.
Yeah.
So, it's going to be a big gamble. You just got to watch it if you're going to invest in something like that.
Like the minute one of the big guys that are still around in the auto industry fully commit to an EV vehicle, they already have everything in place, and it's all the little guys.
They're already doing that. Yeah. Ford, Volkswagen, they're already GM. They're all doing that already. They know that's going to be the future. So
so they're just doing that now. All right, let's bring up Walmart. I have the year-to-date right now on this, and then we can look at the 5-year and the quarterly in a bit. But here we go. They closed year-to-date so far at $142.
Yeah, let me take center stage here, Phil.
You're on top, buddy.
All right, so Walmart. So I have a lot to say about Walmart.
You could put them full screen.
Boom.
I have a lot to say about Walmart. So I've been looking at this company forever. I think we all shop at Walmart for at least some things. I do all of my shopping, actually, 90% of all my shopping at Walmart, because they have everything, and their prices are so aligned with the average consumer. The Waltons and the current CEO of the company has done a great job with really identifying logistic routes to keep the cost down, and what Walmart is doing with their own homegrown great value brand, knocking established brands off the shelf or lower on the shelf. They've done a great job with that too, of rolling back prices of sandwich bags, ketchups, everything really, that cereals, everything. They've done a great job with really rolling back prices with everything. So the one thing here that I like about them is that their revenue is stuck. They have in a good way. You can't really disturb too much of Walmart's revenue. Even in a pandemic, they're still able to generate the exact same amount of money as they are the year before. So 2020. So just another tip here. Walmart is the only company to ever generate over $500 million in revenue. They are the only company that can generate more than $500 million in revenue. The only company. They are the highest earning revenue company in the world. 2020, they made $523 billion in the middle of a pandemic. The year before, they made $514 billion. So think about that now. They can't. Their revenue can't be disrupted at all, because they are the go-to for so many people around the world. So when I say their revenue is stuck, I mean that in a good way. A pandemic is not going to hurt them.
No, it's just going to make them more money because people are going to order online.
Exactly. But the real, I guess, knock is that they have single digit revenue gains. Yeah. So they don't gain revenue. Their revenue gains per year are less than 10%, and their profit margins are extremely small. less than 10%. So with that being said, I was very optimistic, and I actually looked at buying this company. I'll tell you why. Because I was optimistic on Walmart Plus. So Walmart Plus is sort of Walmart's answer for trying to compete with Amazon. So people think Amazon makes a lot of money. They actually don't. Walmart makes way more revenue than Amazon. And
So,
they're trying.
Dalt, I just want to stop you for 2 seconds because there are some
Yeah.
comments going against Walmart right now, and I just want you to address them because it shows something that I think new investors get tied up in. We have someone saying they suck. You have to bring up your own shit, lol. And then we have they have to be saving money. They only have to cashiers now. Well, there you go. Like Walmart eliminating cashiers and going automated saved them during the pandemic because they could
saves
still
them
be
money.
open. They saved them money because they didn't have to worry about, oh, we need more employees. We have these self checkouts. So you learn to check out yourself, but it also speeds up. Like I love using self checkout because I don't have to interact with anybody. I'm in and I'm out. I don't have to have this
I always
awkward conversation with someone. Like if I have a lot of stuff, yes, I'm gonna go to the cashier. But if I'm like if I have like like a dozen things, I'm gonna go quick cash, clack clack, I'm done, and it's easier. So Walmart was way ahead of its time with the cashless cashiers or the cashierless cashiers.
Their business line is pretty good, and it's never gonna go away. But I think what they're trying to do with Walmart Plus is they're trying to compete in that online game. And I wouldn't exactly say, for the person that commented that Walmart sucks, you have to ring up your own stuff. That's actually a really good thing because that saves them costs of hiring somebody at $15 an hour to do whatever they have to do at the cashier. What actually does suck at Walmart though is their online ordering. Their online platform that actually stinks. Like that stinks.
I think they're so far behind Amazon on
so
that.
far behind.
I don't think Walmart Plus is going to do anything, to be honest.
So that's what.
Yeah. Oh, sorry. Go ahead.
I'll just finish up here on Walmart Plus. So I was optimistic on how this rollout would go last year, and it's only $12.95 a month or $98 per year. And what it does is it guarantees free next day and 2-day shipping on items from Walmart.com, and there's no order minimum required.
So I could order like a $2 thing, and they have to give it to me the next day.
Yeah, that's pretty crazy, right? So I was super optimistic when I saw that there's no order minimum because people are going to go crazy. Like I'm just going to order batteries and get it right to my freaking house when I run out of batteries for my Xbox. You know what I mean? I'm just going to use it on the stupidest things, and it's going to come next day. That will put extreme pressure on Amazon. So I was optimistic on it, and I was following the rollout, and I don't think the rollout has been as successful as Walmart had hoped. And the reason why is because their online platform, their app, still stinks, and it's hard to navigate and get around. So they still have a little bit more work to actually do on that. But I think if they can figure that part out, Walmart's going to be very, very scary moving forward.
Yeah, because they have Walmarts in every town. All they need to do is hire their own fleet because they've already created their own fleet in Walmart trucking. Because I remember reading the Sam Walton, the book on Sam Walton creating Walmart, and how he was like, we originally were just hiring local trucking companies, and we had so many independents, we had the possibility to create our own trucking company, and that's how Walmart Trucking happened. And now that they have stores, like there's stores like 20 minutes from nearly everybody. So like you can get same day, and when it's same day, it's like someone goes, oh, we have an order, okay, click clack, it's done. Put it in, and they send it off on a bike, and the guy, I guess you get it 5 minutes later. That, wow.
Yep.
They're changing. If they can get that app set.
Yeah. And for anybody thinking that, Amazon also does groceries, they own Whole Foods. Whole Foods is way too expensive for the average consumer. Whole Foods exists in upper high income neighborhoods. I have to drive like 3 cities over just to get to one, and I have to land in like the highest net worth place in the GTA, which is Oakville. And the houses that surround this Whole Foods are worth upwards of 6 million Canadian. So Whole Foods is not is not the be and end all, and they can't serve a whole wide range of people from that one location because there's so few and far in between. Walmarts are everywhere. So it's
They're
much
like the
more
Pizza
likely
Hut. They're the Pizza Hut of
Walmart
delivery.
does have a grocery store too.
Yeah, and they have grocery stores
Some
now.
of them.
Yeah, they have groceries.
But,
Yeah.
So like they're literally Amazon. They're the Amazon in the analog world, and if they can update their digital, they can take over the digital world and take a big chunk of Amazon's money.
So that's their big wild card. And I've been so optimistic on that. And I'm just kind of sitting back and waiting and seeing how that subscriber growth is going quarter over quarter. But I'm optimistic on them. I'll let you take it from here, Tony.
Well, yeah. Well, like you said, their website sucks. Target's another one. Target's website sucks too. And Amazon is just so far ahead of them as far as like interface and ease of use. And Amazon's pretty much already had a lot of free shipping, even if you're not a Prime member on some items.
Yeah.
And the great thing about Amazon is they have same day deliveries for a lot of items now too. I don't know if Walmart has that, but I will say, like you said, Walmart does make a lot of money. But the thing is, their net income is they make more than double the revenue of Amazon, but they're not taking in the same amount of net income as Amazon. Like, for instance, this last quarter they made $138 billion.
Wow, wasn't that timed so perfectly?
Yeah,
Tony saying, bringing it up, and Tony's
actually,
like, let's look at their last quarter, and it's like, bing.
This isn't the most recent quarter. This is the last one. I haven't seen the most recent one. But they're at 138 billion and they have a net income of 2.7 billion. Whereas if you look at Amazon, I mean, they're at 108 billion with 8.1 billion in net income. So it's such a huge discrepancy. I mean, they're 4 times the income of Walmart. And if you look at Walmart's earnings from July, so if you go July 2020, they're at almost 7 billion, October 5 billion, and then January of this year -2 billion. So I feel like the opening up of the economy actually hurt Walmart in a way, which is kind of weird. I don't know. If you look at their income, their earning reports as we were locked down the previous 6 quarters, they made a lot more net income. So I don't know if they're losing money on shipping. I don't know why they're.
Could be a short-term loss for a long-term gain as they work to update their online.
Yeah.
The Walmart Plus growing pains, because that came in the latter of 2020. So I think that might have played a role in that first quarter, because revenue jumped huge in that first quarter. Just that they reported a loss. Yeah.
The crazy thing with Amazon is their revenue is actually going up and up and up and up and up every single quarter. Their net income. Even as the economy opens up and you would think maybe people are going to the stores more. No, they had their best quarter ever, and it just gets better and better and better the last 5 quarters, which is kind of crazy and also kind of scary because Amazon's probably going to take over everything at some point, but except Walmart and Target. It's just going to be Amazon, Walmart, and Target, and that's the only stores that are going to be around the entire world.
When Amazon starts offering stock, it's the first one to offer stocks. That's when I'm going to be scared. But it's coming. I know it's coming. It's only a matter of time.
Amazon probably could open a bank. They could do whatever they want.
Well, Walmart does have the credit card, so they're nearly there.
Yeah. So, but anyways, so people want to know, should you buy Walmart stock right now?
I would say no, not right now. But follow the subscription, follow the quarterly reports, and track the amount of subscriptions they're getting on Walmart Plus. If you start seeing huge jumps in that revenue stream, you will see Walmart jump to new highs, because it doesn't cost them anything to maintain, and it's just a whole new source of revenue on top of what they already have. Like I said, the one thing I like about Walmart is that revenue is stuck, but in a good way. They can make $500 million in a storm in the middle of a pandemic and a recession. It's not going to matter because you still need to eat. You still need batteries. So
Yeah, they're going nowhere.
They're
They're
gonna be
definitely going nowhere. It's not like
They're the new general
I
store,
wouldn't be
so like they're perfect. They're our general store of the new millennial.
I wouldn't call anybody an idiot for buying Walmart stock, but they are trading. Their price to book ratio is almost 5 to 1. So they are trading pretty high. But the thing is, everything is high. If you look at Amazon's price to book ratio, they're 18 to 1 right now. So everything is really high. Everything is kind of running hot, but it's one of those things where if you just keep dollar cost averaging into the S&P 500, and then you own all these companies. Maybe not Walmart. You might have to buy the Dow Jones.
And Walmart is up 93% over the last 5 years. So coming close, very close to averaging 10%.
If you want Walmart, maybe buy the Dow Jones index, because then you're kind of shielded with a bunch of other companies. Isn't Walmart one of the top holdings in that? In DIA ETF?
You are sending this is you're supposed to tell me in advance so I can have this information up on the screen.
It's all this is probably the most random episode we've done, or there's not a lot of preparation.
It is.
I'm on my third whiskey, so because I was celebrating, I did get we got a sponsor and I locked down a client for my business.
That's what
I was celebrating.
About. Congrats, man!
Thank you very much.
You know what? Maybe Walmart is not top holding.
No, they're not. They're one of the smaller ones, but they're still in there. Yeah.
Okay. I was way off.
2%, just over 2%.
Yeah, I don't know why.
You're forgiven, Tony. You're forgiven.
Yeah.
Well, mind you, the biggest one is only 6%. So.
Yeah, it's up
6-7%. So it's pretty.
Let's jump into everybody's favorite topic: YOLOing into the cannabis space.
Yeah. YOLOing.
We have YOLO NFT, the advisor share per pure cannabis ETF. Let's. How about Tony? You knock it out of the park here.
I'm gonna let Dalton start this. I'm gonna let Dalton start this.
Oh my! Put the pressure on me. Okay, so this is I think I've talked about this before. I haven't done an article on it yet, but I'm going to very, very shortly. These new fund managers with all these clever names, Trip, YOLO, Lose Your Money Now, all these foolish ticker names that they're throwing out there. I don't like them. I feel like they're really playing on new
Why is there not a
Moon
ETF? Moon ETF.
Yeah, there will be a Moon ETF. Someone will come out with that. You better believe that.
Not yet. Not yet. Oh no, there is one. No.
Oh,
there is.
Joey, just do not invest in the Moon ETF. Please, whatever you do, the 7 people that are still watching,
the moonshot.
Do not do it. Do not, please. God.
Anyways, go ahead. Sorry to derail you. I'll talk about
that. So yeah, it's the it is the pure cannabis ETF. Here's the thing. If I choose to speculate somewhere in things that aren't proven, things that don't have long established business lines, I typically don't choose an ETF that covers all the companies in that new industry. I'll tell you why, because only 1 or 2 of them are actually going to make it out of there alive. And it's usually the 1 or 2 biggest players. So to buy a whole ETF to cover the whole marijuana sector, there's so much excess there right now. There's going to be a lot of mergers and acquisitions, and it's only really going to be, a handful of these companies that are actually serving the whole market. So for that reason, I think when a lot of people look at these things, they choose to try and I'll hedge my bets and I'll just cover all the companies in there, so that way I end up winning at the end of the day. But you don't, because you end up holding on to a lot of those dirty bags after they fall apart or fill up with crap. So if you really wanted to be in this industry, I'm not in it. I've never been in it. The YOLO is up 13% year to date. But if you really wanted to be in this recreational marijuana industry, I would go for your big established players. So what does that mean? Your Canopy Growths, Canopy Growth has been a huge company that started here in Canada. I watched that company grow from next to nothing to where it is now. And they've also had some growing pains recently too. So all these companies that were trending high above 67 per share, which was Canopy Growth, is now trading at $24. So you're seeing a lot of that kind of hype die off, and now it's becoming an earnings game. So anybody can sell marijuana with government subsidies, but who can actually do it when it's time to actually play ball? Who's the most profitable? So we're seeing a lot of these things play out now, and a lot of your bigger, your more hype companies are dying and falling to the floor. So if you wanted to be in this industry, pick your guys with the best balance sheets, most cash on hand, your most profitable ones, because those will be the guys that end up buying out all these other smaller players to increase that sort of yield and customer base. So that's what I would advise. For the YOLO ETF, as I just said, I would stay far away from speculative industries that ETFs that try and wrap up speculative industries, because you'll end up holding a lot of really bad companies in that ETF. And again, anything with clever names, YOLO, Moon, anything with a clever name, I just hate it.
Yeah. They do a good job of playing off of the hype and the trendy stuff. Like, people will buy it just because of that name. They don't even know what's in it. So one of my favorite websites is called ETF.com. And I go to this all the time, and it tells you the holdings in the ETFs. It tells you their track record. It tells you the sustainability of the ETF. It gives you a lot of really good metrics to see what this fund is all about. And to give you an idea, so they rate ETFs from a scale from A to F, and they also
just want to make sure it's ETF.com, right?
Yeah, it's a great website. So they give you rankings of the ETFs. So what they do is the top ETFs are usually all A letter grades, and they'll have a number next to them from 0 to 100. And they also, the really good ones will have like awards or badges next to them saying a top 20 percentile of its class or top 10% of its class or whatever. So yeah, for instance, you could pull up VOO and it's an A letter grade, right? Now, if you pull up YOLO.
All right, hold on. Let's check out YOLO. Here we go. What do we got? We got a C.
So it's a C, right? It probably doesn't even have a number grade because it's
it does not.
Yeah. Usually they'll give you a 1 to 10 ranking as well, or 0 to 10 ranking as well. And anything over 6 for this website is really good. Nobody has a 10 ranking. Like, one of the highest I've seen is like 8. They're very meticulous. I don't know what.
Well, they got 94 over here.
Yeah. So that's the A, and then they have they have a bunch of different rankings.
Oh,
but if you scroll down,
it explains. Oh, okay, yeah. My apologies. I'm just a fool. Never mind.
If you scroll down, it'll give you a summary of what it is, and they'll tell you the MSCI rating, and they'll also give you the ESG rating. So they give you so many different ratings and rankings. And they'll tell you the price to book ratio of this ETF. This
is like the cheat sheet of cheat sheets.
It's an awesome website. I highly recommend it. If you're going to if you're looking into any specific ETF and you want to learn a little bit more about it, go to this website.
Here, hold on.
The whole point of this is, if you pull up ETFs like VOO, SCHD, VTI, QQQ, these are all like top-notch A-rated ETFs. If you pull up YOLO, it's C. It's one of the lowest rankings that I've seen on this website, and they have almost no information on this because it's brand new, but they do have a list of the companies that are in it. And like you said, like Dahl said, if you're going to buy a pot stock or a weed stock, I would just pick the market leaders like Tilray or Canopy Growth, stocks like that, companies like that, because those market leaders are probably the ones that are going to succeed, because there's so many little ones that are just going to die out and they're just going to probably get bought up by these other big ones, to be honest. Like companies like Sundial, which is a very popular one in this Facebook group. And this company drives me crazy.
Look, just right here, this right here, price to earnings ratio is negative 9.7. Why would you want to have something that's negative when there's price to ratio?
Yeah.
Price to book. Yeah, this is why are you doing that? Why are you investing in something so terrible?
To be fair, it's because all of these pot stocks have negative earnings. They're all negative PE ratios. They're
it's just like the car situation with the EV. There's so many stocks, like it's not worth it because you can throw a dart and there's the chance.
The reason why people are high on stocks like Sundial and Tilray and stuff is because in January there was a big market pump where these stocks went up like 400% and all-time highs, and then because I don't know why that happened, but there's talk of legalizing marijuana, and that got everybody excited. So they started buying all of these pot stocks. They skyrocketed 300-400%. And then there was a huge sell-off, and now they've done nothing ever since. So a lot of people got stuck holding the bag, buying these at all-time highs. And it may take years to get back to that.
Yeah, here's your three. Yeah, here's around February, March. It was at its highest at $30 here.
Even if it gets legalized in the U.S., there's going to be so many state-sponsored
bills to stop it. Yeah.
Yeah. Well, no, there's going to be so many state-sponsored local distilleries selling weed like we have in Massachusetts and some of the surrounding states where I live. And it's going to be hard for these companies to compete. So, and people are going to be growing weed themselves. I mean, you could buy the seeds and grow it.
So what you're telling me is the best investment is like the seed growers. Like get the people who have the seeds that are selling the seeds.
No, the best investment is just staying away from this in general and just buying profitable, because who knows when these are going to be profitable. A lot of these might go out of business before weed is even legalized in the United States. I don't know, for those of you that don't live in the United States, our politicians can't agree on anything, and the things they do agree on, they won't want to admit that they agree on it anyways, because they want to continue fighting with each other and dividing the country. So they all agree that, like, most people agree that weed should be legalized, but still we can't seem to get that done. So don't count on Washington to do anything for you, to help you in any way whatsoever and legalize this anytime soon, because it's probably not going to happen for whatever crazy reason. And by then, companies like Sundial will probably get bought out or go out of business. So
there we go. All right, we're gonna wrap it up. There is
one good company. Sorry, just to end this off. In the YOLO ETF, it's the one that has the 10% holding, almost actually 11%, pretty much. Innovative Industrial Properties. It's a real estate investment trust. They are profitable, and they've seen a wide rise. And the reason why. They sell real estate to the cannabis companies. So for all those new cannabis companies that pop up and go public, Innovative Industrial Properties is there to sell you real estate, and you'll pay your bills until you go broke, and then
what does that tell you? What does that tell you about the weed industry when one of the top holdings in a weed ETF is a real estate company that sells these companies real estate? And I think the number one holding is a mutual fund. Did you see that?
Yeah.
So they don't even have a company that can actually lead this ETF to have the top holdings. So they don't even have confidence in any of these weed companies. You know?
All right. We're going to wrap it up here. We're coming into an hour, and we're usually only go 30 minutes to 45. So, Tony, let us know where we can find you and everything else.
The Stock Bros podcast. Sorry, I haven't put out anything in like a week and a half. I got to get back on that. And you can find me in the group as always. And also check out my course for investing for beginners on Udemy. And I am going to do what Dalt is doing. I think I'm going to give away one free course a month based on just doing a random drawing of the people that leave comments during our Facebook Lives, and I'll give one of the people that leaves a comment the course for free, or if they want to give it to someone that they know for free, we can do that too. Just let me know so they could send the link to them. Yep.
There you go. Oh, wait, no, this stays, this goes. Adult, why don't you let us know where we can find you and all that good stuff? You do a lot of great things for investors, so why don't you share that?
Yeah, the blog is always bantencourtcapital.com/blog. I posted a new article today just before we went live here on this video. I will kick it back up to the top of the page after the video. I just talked about how this is the longest bull market we've seen in history, and regardless of what you might have heard or what your portfolios say, this has been a huge bull market. Everybody's making a lot of money, and it just speaks really the volume to the power of index investing. You would have made 1,185% in triple Q over the last 12 years, or 481% in VU, or sorry, VU wasn't around, but SPY over those last 12 years. So index investing, S&P 500 and NASDAQ 100 is hugely profitable over the long term.
Jeez, that's impressive. Give me 1 second. Are you guys just going to tag the members in the group when you do that?
Yeah.
Yes, of course.
Tag the winners. I'll do like I'll put all the names in a hat or something and pick.
We'll figure out a way to do the raffle in that as well to make sure that everybody, and we'll get that for you. And of course, I am Phil Better, the host of this podcast, as long as with Tony and Dalt. But I also host a podcast called Invest in Yourself, the Digital Entrepreneur Podcast, where I actually interview entrepreneurs in the digital space and learn how they started their journey. And you can follow my journey to being the podcast mogul and how I host so many podcasts. Everybody, I want to thank you all for tuning in, all 20 of you, everyone who's live, leaving comments. We thank you so much. We love the engagement this we're doing for you guys so that you guys can become rich in the future. That's what we want for you. I am Phil Better. He's Dalt. He's Tony. We'll see you in the group.
Thanks, guys.